Now we're going to take a look at the budgeted income statement for the quarter ended June 30th. So the sales in dollars that we see here on the income statement for the quarter is the total sales for the quarter for all 3 months. And where are we getting that from? Well, if we take a look at the sales budget from earlier, we had determined the total budgeted sales for each month, but also the quarter as well. So that's where that $1 million is coming from. Then we have to subtract out the cost of goods sold. So of those $1 million, how many units would that refer to? So we know for the quarter we had budgeted to sell a total amount of 100,000 units. So to find the cost of goods sold, I need to know how many units am I budgeting to sell and what's the budgeted cost per unit of product. Well, under the ending finished goods budget, we had determined what the estimated cost is per unit. And if I know how many units I budget to sell, which is 100,000 units, we can take the $4.99 cost per unit of finished goods times the 100 units I estimate I will sell for the entire quarter to get $499,000 of cost of goods sold for the entire quarter. So we take that $1 million of sales minus cost of goods sold of $499,000. That gives us a gross margin of $501,000. Then we need to subtract out our SAG expenses for the quarter. And where am I getting that from? This $260 is coming from the SAG expense budget. So we had determined that the total SAG expenses for the entire quarter is $260,000. So that's where that's coming from. When I subtract that from my gross margin, I'm left with my operating income. And then remember, we had interest expense from the cash budget for repaying that loan. So we need to subtract out the interest expense, and that gives us our net income. So once we get to the point of setting up the budgeted income statement, we're really just pulling numbers from all of the previous budgets that we've created. So now we're going to take a look at how to set up a budgeted balance sheet.